got a packed show for you. We are actually now going to talk about reinventing market infrastructures, and there was a session on that yesterday. We've got some of the panelists from that session joining us now. Let me introduce you to some of them. Wouter Deploy is the Director and Senior Partner at McKinsey. Lieve Mostry is the Chief Technology and Services Officer at Euroclear. Chris Hamilton is the CEO of the Australian Payments Clearing Association. Ebru Pakan is the Global Head of Payments at Citi Transaction Services, and David Yates is the CEO of VocaLink. Thanks very much to all of you for joining us. David, if you can't hear me, because I know you're having some problems, let me know, and just stick your hand up and I'll elevate my voice. So let's start with you, first of all, Wouter, because you were the moderator of this session yesterday. What were some of the main things that came out?
Well, I think one of the things was a real positive sense about where market infrastructures are standing. Following the crisis and all the regulation, people are quite bullish about the resilience of market infrastructures and how they've responded to new regulation. One, and two, that going forward, if they want to sort of sustain their futures and be effective and successful, that reinventing themselves through innovation is going to be one of the key ingredients. Innovation rather than costs or other dimensions were seen as the number one element.
Well, we had indeed interesting discussions about how market infrastructures contribute to bringing efficiencies of skill and scale to the market, eliminating risk out of the market, and then in this environment with the whole of regulation putting so much constraints on the stakeholders, how we can add solutions to that. And we took some examples in the securities environment. We have developed a collateral highway that should help all financial institutions to move collateral much quicker around, which is very helpful in these days of capital requirements and the likes.
I think one thing that really came out for me in yesterday's panel was how much market infrastructures are being pulled in different directions by different forces. So coming out of the global financial crisis, of course, we've got the regulators wanting lots of security and stability and risk management. But you've also got customers looking for much more focus on their needs and innovation to expand the range of services. So on the one hand, you're trying to be commercial and competitive and focused on the customer, but still trying to keep that security and stability that's the hallmark of a market infrastructure, and that's a real challenge.
I will build on Chris's point. At the end of the day, innovation was a very important theme, which was really being discussed by all the panelists. But the actual core of innovation has to be around customer needs, and that's the end customer. It's not only the members of these clearing infrastructures, but it's their clients and even their clients who needs to be benefiting, and their issues or use cases needs to be solved for as part of innovation.
And I recognize all of the points that have been mentioned before, but in addition, I think we talked a little bit about the role of the regulator and how the regulator is really driving forward and opening up of these infrastructures, which is a real challenge because on the one hand, the industry tends to have paid for the development, and on the other hand, many new users are clamoring to get access. And so finding that correct balance is a pretty tough thing to do.
What is the correct balance?
That's a big challenge. I suspect we're going to see different types of market infrastructures develop over time, so there will be a need for basic utility style structures to support large segments of the market, but we'll also see some market infrastructures becoming much more commercial and being much more focused on delivering services to particular communities. That's going to create tensions of its own though, I suppose, because that leads those organisations to become a little bit more competitive with their own customers. And I think that's a challenge going forward as well. So if you look at card schemes in payments, for example, there is a strong trend towards them commercialising and becoming a much more competitive product providers, but then ACHs, the basic clearinghouses, tend to stay at that utility level.
We also discussed the topic about governance and ownership, and when talking about that, it became very clear that there are a number of dimensions we should not confuse. I think we all agreed that having a for-profit focus, even if it has to be moderated to some extent, helps to bring discipline and cost attention and a wise management focus to the organization. We think that the governance is very important because you need to build solutions that answer the needs of your clients. So that and interaction is really very important, and that's where the governance fits in. And then we kind of agreed that on the ownership of market infrastructure, there are many models in place. A lot of them have grown historically, and if you have the two first dimensions right, the ownership is a bit of the lesser important topic to discuss.
And so I think that was a very nuanced discussion about ownership and governance, and not the sort of religious black or white discussion we had. The other one was around competition in terms, do we need market infrastructures to compete? And I think also there overall people said, yes, it's a healthy thing to have some level of competition. Well, we need to make sure that there's a level playing field and that not new players or people coming in from other geographies don't have an edge which gives unfair competition and on the one hand and also introduces risk into the system.
By the way, I just want to tell everybody that this is the first year, I think, that there is this market infrastructure handbook, if you like. It sort of details for you all the sessions that have been taking place on market infrastructure throughout the conference. And it has quite a few articles, etc., in layman's terms. And I think that is really the biggest challenge when people come to start to talk about market infrastructures, particularly customers, because I think sometimes it gets lost. What are we really doing? All of this stuff it's for the customer. They can't really understand. It's like you're both speaking in different languages in a way, isn't it? So, and I think you brought up an interesting point, Ebru, in the session that I was reading in Sibos Issues this morning, and you were saying, you know, it's all well and good to have innovation, but it's not just having innovation for innovation's sake. Let's look at what problem are we trying to solve? Step back and look at that the bank should be doing before getting on board on this innovation bandwagon. Tell me what you think that is out there in the industry that they haven't done that. They haven't stepped back and are trying to solve problems that either aren't there or they're not solving the problems well enough.
So I think one of the drivers of innovation in the industry over the last few years has been the fact that there is third-party non-bank providers which has been coming into this space, especially in the retail payment space. And that is forcing the market infrastructures along with banks to try and be more innovative. And as they do that, there is new tools and new technologies out there. So it's very easy to very quickly jump on the bandwagon to say, here is a new piece of technology, here is something new that we can do, without necessarily thinking about the background on how that's going to be used, what sort of issues it might be solving. We did discuss yesterday very briefly, although there are some use cases, for example, the question to me around real-time payments is out there. Is that the most important innovation that we needed? Or for a banker who's serving institutional client base, I feel for corporate payments, for example, there is other innovation that we could be thinking about, like getting more data into the payments and clearing systems, which can help broader reconciliation and data management, for example.
Yeah, I think the real-time payments issue is one that's getting a lot of airplay right now, and a number of regulators are saying to their market infrastructures, how are you going to deliver this real-time payments, very, very quick payments? And you can see why that is. If one steps back and looks at the retail customer who's used to working now on the mobile phone and doing whatever they want, whenever they want on the mobile phone, it stands to reason that if you were building a payment system for those people today, it would be real-time because everything they do is immediate on the phone. And yet, how much is that need actually manifesting in the way the economy is developing today? So I recognise the dilemma. If it's going to cost us hundreds of millions of euro or hundreds of millions of dollars to deliver that outcome, we better be very clear that it's going to get some serious benefit for customers and quickly. So I think that is a dilemma, and we have to manage that differently in each jurisdiction.
Yes, I think one of the things that became very clear in the discussion yesterday was that although we talk about ourselves as market infrastructure, actually the consumer needs or business needs of those people we're serving from the retail market infrastructures compared with, let's say, the capital markets market infrastructures are radically different, and we need to be very close to the consumer in each case, or the business that we're supporting. And I can see a fairly large difference between the real need for real-time payments for consumer-facing services versus as you say, corporates or even institutional in some cases.
But I think if you bring it to a somewhat higher level, I think the thing we all say together is that innovation has to be driven from business and product reflections rather than from pure technology reflection. Even though I'm the technology officer, I think technology is a means, it's not a goal in itself. And that's where we have to remain very attentive because sometimes we get carried away.
Tell us some of the business needs. I mean, the more pressing, yes, we know customers want you to be closer, they want more flexibility, blah, blah, blah. But tell us about what are some of the specific needs that when you've got your customers, what are they complaining about more and more?
So at least in Australia, the demand is for better automation of the payment, and that actually means more data with the payment. So historically, the electronic payment systems don't carry a lot of information with the payment. So although they are themselves electronic, there's often paper or other forms of communication flying around the payment in order to make it happen. But a lot of industries are now automating their own processes. So the superannuation or pensions industry is developing its own automated framework. The real estate industry is developing a framework for buying and selling or processing real estate transactions in a fully automated way. If the payment system's going to keep up with that, it needs to inject a lot more data into the payment flows so that they can reconcile seamlessly with all of that business activity. And I certainly get a lot of commentary from corporates in Australia saying, how is this going to happen? When can we use these new services? And sort of that's quite challenging for the payment system.
I think just another topic is, and we did talk about competition. In many markets now you have competing schemes, and sometimes these competing schemes are even overlapping. So that does create a certain level of confusion in the marketplace in terms of which payment type to use or which scheme to go through. So that's a role that we play in banks to actually guide our customers what is going to be the better route to take for what type of payment. But actually, if you just step back for a second, and that was one thing that we discussed at the panel yesterday as well, competition is great, it's the right way to go, but at the same time we need to be able to take out some of the legacy and know where those overlaps are, so that we are not actually increasing the number of schemes, but actually going to more leverageable schemes and perhaps far few, but still in competition.
I think one need was also put up on the table in the opening plenary, which is basically compliance. I mean, how can banks become compliant, and how can they mutualize some of the costs and the efforts to do so? And I think that's also an opportunity for SWIFT to step in and basically be asked to help resolve that issue for the banking sector.
And how specifically would you like to see SWIFT do that?
Well, SWIFT has already today a number of tools and a number of programs out there in the space of sanctions, in the space of know your customer. And so I think these developments are well underway to support the market in that specific area of increasing demand and increasing needs.
Just this stream at Sibos of the market infrastructures is itself a very important development, I think, because what SWIFT trying to do here, and I think this is the first year it's happened, is they're trying to bring together the payment side of the SWIFT community and the security side of the SWIFT community to learn from each other. And it's quite clear that we think about things in different ways and we have different pressures, but we can absolutely learn more about how to do what we're doing from the other side. And so that's a very valuable contribution SWIFT can make right there.
Absolutely. Well, one of the things that we discussed yesterday was about the role of the regulator to help market infrastructures perhaps come up with some of the principles of how the governance and ownership topic needs to be addressed. And perhaps that's an area where SWIFT could help through the forum to a certain extent to define what some of those principles needs to be in the governance process. And that can then drive the ownership. So forum, as Chris says, is actually a good way to perhaps bring it together.
I would say that payments and markets infrastructures have been something of a backwater for a long, long time. And in the last couple of years, I think the attention that's been paid to them by a very large number of constituents has just changed. The politicians are interested, the regulators are interested. Of course, the banks that own us have always been interested, but now consumers are interested, competition authorities. We have a huge number of constituencies that we now need to include in the debate and whose views we also need to respect and to try to accommodate in what we do. So this kind of debate at Sibos really is very useful in actually sharpening up our focus on how we serve all constituents.
Okay, guys, we've got to leave it there. Thanks very much for joining us.